Welcome back, everybody, to the Alfalfa podcast. We're still missing Mr. Sushi Boy. Nick, we love you. We miss you. Come back soon.
He has mercury poisoning somewhere in the world.
We did receive intel that he did actually just land, and he is in a whirlwind of jet lag and pain. So totally understand that. Do not want to be in those shoes, but I wish I did have the sushi mercury hangover.
That sounds good.
I know.
I had a thick sushi dinner last weekend at what's it called? Shino. God.
Shino.
Oh.
I love
I can't believe I
Shino.
forgot. Shout out to Robert. Robert's probably not listening to the pod, but
Yeah.
Robert just simultaneously was appreciative and offended.
I would be so happy if I went in and Robert just Robert's my favorite sushi chef in San Diego over there at Shino.
I remember some of your stories.
Oh, just fire. Anyway.
Yeah, he's part of the family, right?
I used to go to that sushi bar like 3 nights a week when I lived down the street. It was.
Yeah.
What do you go with? Like, what's your favorite sort of like? What's your favorite fish?
Whenever I go there, I go just omakase. I just go feed me.
You go with what they give you.
We should do some.
Open your mouth, stick out your tongue.
We should do some
close your eyes.
sushi alpha maybe in one of
That'd be
these.
good.
Yeah.
I like that.
I feel like I've eaten enough.
Yeah.
We'll do that when Nick gets back. I want to get the download and
He's
everything.
probably just upgraded his sushi knowledge and palate by an order of magnitude. I've told this story before how one time Nick and I got on a plane and went to Tokyo for 36 hours to eat sushi, right?
That's insane.
Like I've told you guys that.
And then you just came home.
Yeah, that's
Yeah,
when you
just
had
came
your
home.
little passes, right?
Yeah, we talked about it on the pod.
Yeah.
The flight pass.
Oh, so for you that was
So we flew first class both ways.
that was
also.
an excuse just to do some work.
Well, yeah, for me, yeah. No, the work on the plane was unbelievable, but it was just open. It was just like we were looking at the flight pass availability of like what's available first class.
So you could even see
And
the
Tokyo
return
was the
trip
one.
in advance.
Yeah,
Because it was
basically.
so close together.
Yeah, exactly. It was so fun. We
amazing.
arrived at like 3 or 4 a.m., went to the fish market and had like walked into one of these like right in the fish market area sushi spots. We were like, we're not going to use Google Maps. We're not going to look at reviews. We're just going to unplug and go with the flow here. And we found the best one ever. Maybe I'm saying that because it was just like pure,
It doesn't matter.
It doesn't matter. The
Yeah.
spontaneity, the beauty, the people we met. And it was like we were eating raw fish at like 4:30, 5 in the morning with green tea. And it was amazing. We're going to talk about this when he's back next week, even more, I'm sure. But yeah, just a little teaser. So Nick, we miss you. Today in this money episode, so we're going to do a little market alfalfa round. We're going to talk a little markets. Obviously, there's a lot going on in crypto. And then we want to round this episode out with a discussion around, there's a lot of people in our alfalfa community that are growing businesses. And in particular, there's another Steven in our community who shouted out today that he's launching a business and just formed a partnership. Congrats, Steven. And plenty of people that want to fund their ideas. And that's what we want to talk about today. That's what I've been working on. I've been deeply involved in understanding the different funding paths that are available, but also like pretty clear on like what's currently working and what's not, and what the different pathways are to actually getting not just funding, but ultimately like what is the vision here? What is the goal? It's to build the business, to build the company and ensure its profitability and make it a lifestyle, make it your career. So wanting to become an entrepreneur in general. So we'll talk more about that. Cool. Alfalfa round.
Yeah. So before we start talking about number go up, number go down and everything, I think we should take a step back and acknowledge that Chapella went live today.
Oh, Shanghai,
Pretty big,
baby.
Shanghai plus Capella, you get Chapella.
So node operators and early stakers can withdraw now. Doesn't seem like there's too many people withdrawing and selling because the price has gone higher.
So that was this morning, right?
Like, yeah. So explain what's going on. So there's a queue.
April 12th.
If you want to withdraw your stake, there's only a certain number who can do that. There's a queue. Is that right?
Yeah, there's a queue to exit as a validator. There are people who can explain this a lot better than I can. But
Yeah, watch Bankless.
yeah, like this. Please don't come to this podcast for your in-depth Ethereum theory. But yeah, I think depending on how many people queue up for that, or not people, but validators.
I just had this image of you as the drunk guy at the bar explaining something versus David is this like very honest
Professor.
and professor, like very calculated.
Professor
like he's
David.
thought it through. He has his lesson plan ready. And then Steven's like 5 glasses deep into a burgundy. And he's just like, what do you want to know? What do you want to know?
Yeah,
And
well,
it's
you
just
want the real?
completely-
You want the real behind this?
So that's what you're going to get.
Yeah, I mean, the
always.
TLDR
Friendly reminder.
TLDR is that validators can withdraw their staked ETH, which they've had for a while on there. It's been basically locked since staking went live, years ago. Depending on how many people decide to exit, I think it's roughly 30 to 90 days of sell pressure, depending on how long the exit queue takes to go through. Last I checked today, it does not look like there's a whole lot of exiting going on. So
Like the queue is not fully backed up.
it's not looking like a very thick queue. So perhaps that's the reason number go up today. Perhaps I don't like to attach these little explanations, but like ETH BTC was up, I think like 2.5% today, pretty decent move. In reality, both coins just kind of retesting their Monday range highs. We had like a really bad sell-off in ETH relative to Bitcoin last night, so I think we just kind of reverted that after maybe the queue didn't look quite as bad and that FUD subsided a little bit. So not looking like it's going to be an apocalyptic event yet, but we'll see.
Yeah, I was wondering if this is not just like a sell the news event, but like in the reverse, because like most news events are like
Sell the rumor, buy the news.
well, like how the merge was supposed to be this big news event that like leads to this euphoric pump, and it does the opposite, and then maybe like Shanghai was like, oh my god, this is a huge liquidity event, but it just does the opposite, where it's like no, price just kind of trickles higher.
It's a funny thing about markets, which is that you never really know the extent to which price is already reflecting this, right? Markets are often just a game of expectations versus reality. For all we know, the market was like overly pricing in doom.
Right.
And when doom didn't really subside, we had a huge rally on a relative basis.
That's a great point. Now that I'm like zooming out of it and hearing what you say, it seems like that's actually the case. Like we were pricing in this huge liquidity event. You're saying that like the queue is not even fully backed up. So now price goes higher as people sort of like reimagine what that sell pressure is going to look like in reality, which is much less than we expected.
Is there a case, a strong case where this just all is kind of nothing for 30 to 90 days?
Yeah,
During
it's
this-
a very strong case that just nothing happens. Like if the market sort of priced it all in a way, then yeah, I guess nothing could happen.
Yeah.
It's kind of weird with this flows type stuff, right? Where you would
Right.
have like the halvening is like a flows thing. You have this event, and then for a period of time, there's this reduction in sell pressure, and there's always this argument about the halvening's priced in, or the halvening's not priced in, or the halvening can't be priced in, or who knows, right? So yeah, I think all scenarios are possible. I don't really think we're going to have some sustained mega pump. I suspect this was like a one-time reversion, like a sigh of relief, like but is this going to be like 90 days of pumping now? I don't know. And
Did you guys see Benjamin Cohen? I don't check Twitter very often, but this one stood out to me. Benjamin Cohen's tweet like yesterday
Which one?
about like he was like, look, if you're following me and you're upset because I'm saying that Bitcoin is going to win against all alts over this next like period. I don't remember the exact phrasing of what he said, but he was like, if you're following me for that reason because you want me to pump your alt bag, like you're just following the wrong guy. Like fuck off. Like go somewhere else. It was like a way of cleansing his following a little bit because I think the tweet started with I see the comments. That's what it was. I see the comments and shut up. I don't care. But how does he look at ETH when he said he absolutely does not call like ETH and alt, right?
No,
But
he does.
No,
does
he kind of puts it. Like,
That's what
in
I was
his
wondering.
own
Like, does he?
thing.
I don't
Yeah.
know. I've been listening to him for a long time. And
I couldn't quite figure that out.
Forever, he had been doing that.
He very specifically has said, I don't consider ETH to be an altcoin. Like,
I
in
just couldn't
recent
tell if in
months.
this tweet he meant ETH also or not.
He does mean ETH also. Like, he's been very frequently kind of doom posting about the ETH BTC ratio, which like,
coming back home.
I kind of agree with. Like, it does look bad, and in a world where we go into a recession in second half of this year or whatever, like I don't think ETH is going to outperform Bitcoin there.
Mhm.
I just don't. It's possible, but I think price wants to go back to an area where it's like attractive to buyers, where there's like liquidity. I think that like a lot of people are happy to, sell their Bitcoin for ETH lower. Like right now, why would you do you really want to ape into ETH right now? And you've got, even if they're minimal, like there's still a bunch of selling on the horizon. The economy looks weird. Like I'm personally kind of like agnostic to it at the moment. Like I'm just like, well, why would I even risk it? Why don't I just trade different coins? Like, why don't I just trade something that doesn't have this? I think there are a couple coins that look good versus ETH, but more importantly, look good versus Bitcoin. But Bitcoin also looks really, really strong right now.
Whoa.
So if you're,
What are those coins?
so
Give me the alpha daddy.
I've been like, I started buying a little bit of like Phantom. Are you familiar with Phantom?
Yeah, with the F, not the PH,
You are
not the wallet.
degen, sir.
Yeah, that's
I don't think Phantom's that degen. It got like totally murdered. It's
Was Andre back?
Was Andre back? Who cares? I just look at the chart. The Bitcoin chart looks really good on it, and if we kind of go back up, for another leg, I think it'll do well. So I'm
Just playing
interested in
higher
trading
beta.
that one.
Okay.
I keep waiting for Arbitrum to look good, but it just keeps looking like dog shit. But I think that the FUD and all that is going to create an opportunity at some point. But like the foundation just absolutely, completely fumbling the bag, lighting the bag on fire while it laid on the ground. Like they blew that so hard. So that token's been dumped mercilessly. But I think at some point that will be opportunity. I don't think ARB tokens are just going to go down only forever.
Okay, this leads into my Alfalfa pretty nicely. So Warren Buffett was on CNBC early this morning.
Oh.
I missed that interview, but he did a very long one. He did a long one
Really?
with Becky Quick, probably maybe 20 minutes long. And I actually caught like recaps, like clips, 5 minutes each on YouTube. So I got like the whole thing. And my Alfalfa here is like, I think what I'm seeing is like this disparity between fundamentals and technicals, right? Because like what Steven's talking about most of the time are just lines on the chart, which has nothing to do with fundamentals. He's like obviously always sort of like poo-pooing the fundamentals, honestly. So Buffett comes in and he's like a very fundamental guy, and he's saying things like, so we see like skeletons in the closet beyond what the banks had initially shown, which is just like mismanagement of assets versus liabilities. There's like commercial real estate stuff, and Becky Quick, like the CNBC host, is asking him, so are you buying anything here? He's like, no. Like he thinks there's more blood in the streets before he's buying. He's always like the buyer of last resort. Like that's his thing. He's like, I want to be the last man standing so I can scoop up everything when it's dead. He's like not buying this shit yet. Okay, so that's alpha to me. Like I think there's still blood to be drawn out of this market. But then on the opposite hand, like technically we're looking at ETH pumping, Bitcoin pumping. Steve and I were talking before we started recording here. It's like this feels like very like bullish in this very near term scenario where like if ETH can puncture through 2100, then there's like maybe nothing stopping it going from to 2500. Like what are you seeing in these charts? Because these two things are opposing, right? Like Buffett saying like, I'm not going to buy shit here, it's going to bleed out, versus you seeing like Bitcoin and ETH rallying hard and maybe it going even higher.
Are they opposing truly? Like in the
Well, certainly in direction, but like maybe not in time horizon.
right? Okay.
Yeah, I think both of those things are probably correct. There's a few places I can see us topping out on Bitcoin, I think, which I think is easiest to do, and then kind of work backwards from there since Bitcoin leads the market. It's possible that we just topped. It totally is. It never really feels like the top when it's the top. But that's why they're tops. Everybody's bullish and can't conceive of it going down, and that's when it kind of goes down. So I think that's unlikely. We do have like this kind of thick area to kind of move into here, like roughly up to like 32K or so. Now that we've kind of tested into it, it seems highly likely that we at least go through this area. So 32K, plausible to me that we sort of run those 32K highs, get everybody a little bit bullish. There's a CME gap up there. I talked a while ago about how that like CME gap before 28K was going to get filled, and we filled that on this kind of move up. These gaps tend to be filled, and that seems like a logical target. That would be a really evil one because it would be pretty big run up from the 32K highs. Like you would feel like you're in the clear.
What do you mean by CME gap? You're talking about the futures, Bitcoin
yes,
futures?
Bitcoin futures.
Wow, I'm
Okay.
glad I wasn't the only one that wanted to ask
Yeah,
that.
yeah. So
No, thank
the
you for
Chicago
thank you for
Mercantile
clarifying
Exchange is
that.
where you trade futures. So that's the Bitcoin
Okay.
futures, but there must be a gap at 32K.
It's above 32K. I don't have the chart in front of me, but I feel like it's like 35 to 37-ish, right? So that would be a pretty nice move above 32K. There's a lot of short liquidity probably resting above there. So you can see price push up into there and then dump. And then after that, I think the last logical target for me is the yearly open at it's like a yearly open at about 45K that we haven't tested. And that's a pretty nice move from here. It's a solid 50% still from here.
And if you're thinking
If we
about
get
alts, these would all just be higher beta versions of the same move on Bitcoin.
Maybe. I think it's actually complicated because if you look at the Bitcoin dominance chart, like it looks like it wants to rip to the upside right now. Like if we've been trading in this tight range for a while.
Yeah.
So two options. One, we hit the top of the range and we go back down and Bitcoin doesn't dump, in which case alt season and we're all getting Lambos if we buy shitcoins, right? But the other scenario is that it breaks out of that range, dominance goes up, and then like you make money in alts, but like you're getting crushed by Bitcoin returns. And we haven't seen one of these periods in a long time. Like when was the last time you can remember where Bitcoin just absolutely ripped? It happened kind of at the beginning of last cycle and then just like never again, basically.
Yeah.
And everybody kept saying like, oh, King Bitcoin's going to come back. and it just never did.
I do think it will. One of these days it will, because I
For sure.
think it will. Like
It's just,
things move in
That's-
cycles. Yeah.
yeah, that's just kind of it. Like there's
Right.
no other way.
Are you
Yeah.
guys feeling okay right now? Are you feeling the FOMO? It was pretty intense week.
Yeah, like we were talking about this offline before a little, so let's go into it. Yeah, no FOMO for me.
Literally zero.
Wow,
FOMO.
Zen.
Yeah.
Love that.
Well, I mean,
None.
like I have the exposure.
I
on
know
the-
when I'm having FOMO when I'm like having that oh my god get my laptop moment and start looking at things, because for me it's I'm either paying attention or not at all, and I'm not.
I think this is the like the justification for having the forever bag. Like you just never sell some, and then when it's pumping as it is now, like it's pretty modest pump here, like from where we were before, but. You know, I have the forever bag, and you know that's gonna keep going, and I'm happy with that. But I have no FOMO, like literally zero, negative. I'm like looking for an opportunity to go short on like a trading bag, so no FOMO.
Yeah, and that kind of makes me wonder if we're gonna go higher,
Good.
because it's not until like the markets are funny. They have a point of bringing the price up to this point where you're literally like, wait a minute, did I actually miss the bot? We're at 2,800. Did I miss the bottom?
We should go higher if Eric and I don't have enough FOMO. Like that's only logical. Like
Dude,
no, and I'm okay with that.
bring it. I would
No,
love that.
bring it. I'm okay with that. I just mean like, yeah, of course there's going to be more demand that flows in when this thing gets more attention and it starts pumping even more. And I'm just still not there personally.
Fucking
It's very zen of you. I've had crippling FOMO all week.
I'll be selling calls all over.
You're
that shit.
living in a
I bought
different
the
reality.
I bought the wrong coin.
You're literally living in a different reality. So, for crypto to get the attention of like someone in our position is a certain level of action and price action in general and movement of the market. But for it to get the attention of someone who's just not at all crypto savvy is like a whole different level.
Yeah, have you gotten any like texts or anything?
No.
Yeah, like it feels like nobody's noticed yet.
No. Like occasionally it'll come up in a conversation and someone will be like, oh, Bitcoin or Ethereum, they'll usually say one or the other, kind of pumping lately. And that's it. That's the conversation. It's just like, oh, it's kind of up. And I'll be like, yeah, it's up. It's still not even close to all-time highs. And it's not even halfway there. And they're like, yeah, but, oh, it's been up a little bit. And I'm like, yeah. They're like, okay, it's not dead. They're like, oh, it's not dead. Okay.
It's not dead is the first step.
Yeah.
Oh, interesting.
Yeah.
Can I
watch a little more?
Can I run something by you guys? Because I actually think that I'd like to modify my answer a little bit. And I've been feeling a little bit of FOMO, not with crypto, but with other assets. So like I'm like a TradFi guy at heart, right? So what I'm really interested in is like investing in things that have positive cash flows and a yield that is generated by a legit business that I can invest in and own over a long period of time. And like when Buffett got on this morning, he was like, yeah, so Buffett's like, I bought 7% of the 5 largest trading companies in Japan because they're offering me a 14% earnings yield and they're increasing their dividend every year. I was like, oh my God, that just sounds so awesome. I started to get FOMO on like trad businesses. Like I'm starting to get FOMO.
FOMO
on, like,
into Japanese trading?
I'm getting
Wow.
FOMO on just like cash flow generating businesses. So I was looking at different ETFs today. There's like this awesome ETF in the United States. It's called COWZ, cows. That's like large cap cash flow generators. And there's like small cap cash flow generators.
kind
called
of
CALF?
What
like
kind
calf.
of dividend does that ETF play?
They're about 2%, but the cash flow yield on the small cap is like 14%. And I started like looking at the holdings individually. I'm like, okay, which one of these like do I like? And I'm just sort of making my way down the list. And so I was getting FOMO on these actual businesses. ETH, I know, like has a earnings yield of 0.0001% or something. Like it's purely speculative. But like there are businesses out there that are still businessing and still generating money and will pay an equity holder, not a fucking network participant. Like.
Curious, did you have any other big takeaways from Buffett?
Oh man, for the life segment, he had something funny about. They asked him about ChatGPT.
Oh, nice. Did he call it dog poison?
So they asked him about Bitcoin and stuff, and they said like, so you called Bitcoin and crypto rat poison squared. Bitcoin's been around now for about 15 years. At what point will you feel validated that this thing is actually garbage? And he's like, well, I don't know if I can call an end to human behavior's desire to gamble and speculate. And it made me think, I was like, well, that's never going to end. Mm-hmm. And also he was like, and I invested back at like in the early days after like Bugsy Siegel died or whatever. He's like, I bought the Tropicana in Vegas. And when I saw all these people that were willing to fly from Omaha to go and put their money into negative EV things, and they're all excited to go do it. He's like, oh, I'm going to be rich as fuck. And I'm wondering now where his like disconnect is between one and the other. It's like,
interesting.
Like I'll fucking play in this like.
Interesting. So he's already made the bet before, but yet this is one that he just seems to not be able to stomach.
I think when you get so rich, you start to think about like what's good for people instead of like what's going to make you the most money.
Propagate the
And maybe he's thinking like, oh man, so many people are going to just lose their shit on gambling on shit coins.
Yeah.
Which is true.
Interesting.
He's not. I feel like he's not like entirely wrong on Bitcoin. Like there's some truth to what he's saying. Like people are gambling.
It is purely speculative
on the idea that more people will just want it in the future.
Yes.
Whereas something like Ethereum, you could argue that the network provides a great deal of utility to people who use the network, to people who deploy smart contracts on the network. And since you need Ethereum to use the network, like it's actually like a commodity type thing that has some sort of intrinsic value. There's like some demand there to do a thing.
Yeah.
Whereas like
he
Bitcoin
loves productive assets.
Yeah,
Like, and like I think
Surprised he doesn't like Ethereum more.
well, he just doesn't understand. Like I think
Yeah.
if he were to live 15 more years, he would look at this and be like, oh, this can be a productive asset. Okay, cool.
yeah, hard to describe that, but
So the trading gods woke you up at 3 a.m, Steven?
yeah, I have like I've spoken before how I have trouble sleeping before like CPI and FOMC days. It's like Christmas Eve to me, but like kind of like a weird Christmas Eve where like Santa might bring me a gift, or he might just
Come in, eat
like
the cookies,
punch
and
me in
leave.
the face and just like leave.
Yeah, he just eats the cookies and he leaves.
Yeah,
Yeah.
Eats the cookies, burps,
And punch.
chugs milk,
Yeah.
slaps me, and gets on his reindeer.
Did your parents like reenact that? Did they leave clues for you as a kid, like where Santa had come in the house or
Oh,
anything
I
like
have.
that?
You're getting into.
I'm sorry. This is traumatic. Okay.
I've got some.
Sorry.
It's a no zone.
I've got some good stuff for that later.
Oh, good stuff for
Yeah.
that. Okay. I thought maybe
Stay tuned for next episode. No. Only
brought up some
only good things.
PTSD. Or,
Yeah. I have a lot of PTSD.
I mean, I get it. We all do.
Not that.
I learned that there's a spectrum of PTSD.
Santa banged my mom.
Oh my God. Honey, I don't know what Santa's been up to all night, but I feel great.
This episode is so chock full of financial alpha.
Oh, it's awesome. What else would anyone want?
Oh.
All right, so the CPI print,
it was
Christmas morning.
CPI day. I originally thought the CPI was just like a complete nothing burger. Actually, I faded the move like pretty hard this morning and actually made like a good trade in equities anyway, not so much crypto. But I mean, I dove into it a little more, and I think it's actually kind of a dovish print. Like, I don't know if you've looked it over at all, Eric, but
Yeah, what'd you find dovish about it? So I saw the headline number, and then I saw the sort of component pieces that are driving the headline number.
yeah. So core is the thing that Fed likes to look at, right? And that was unchanged at kind of like a sticky number. So on the surface, not that great. But I was reading a write up from Darius Dale, and he was pointing out how if you like dig into it, there's this sort of like goods element to it that is just like an outlier that's like going to come down. So really, that number is actually effectively lower than it was.
So let's just like briefly go over it. So what came down in price? Like gas and fuel came
I mean,
down in
energy
price.
is like negative, printed like a negative 8.6 or something like that.
So that came down. But
Food
then, like,
is down like in the low
no, food's
threes.
way up, I thought.
I think it's like
Food-
in the low threes.
Food was way up. Food and shelter way up.
No, I think food was down in the low threes. And shelter's been like the rate of change on it's been good. And the other thing that was huge is like services has been like a huge sticky point. I think that was like the biggest decrease.
I guess it depends if
seen.
you're looking month over month or year over year.
Yeah, no, month over month. Like the year over year numbers are silly. You want to look at this over like sort of like 3 month average annualized to kind of smooth that. But yeah, it looks kind of dovish. And then one thing I forgot was that in the last presser, Jerome mentioned, he was very specific at mentioning that they viewed what's happening with the banks right now as like tightening. Like it's effectively like rate hikes.
Yeah.
So
I agree with that.
With that kind of language and I think dovishness of the print, like you can really see how there's a good probability they might pause next month.
Like, yeah, in a way, this is a bit of a reason to pause.
Yeah, it certainly gives them an excuse to take a breath, and they probably are wanting to take a breath right now. They've been jacking rates.
Can
for
we
a while.
inject a little bit of a circle back and future pacing of like the hyperinflation episode and Bullish and sort of the combination of hyperinflation and the way the Fed is handling the banking crisis, and just kind of have like a little conversation around that?
Yeah, I mean, I think everything we talked about in that episode still stands. By the way, we've got like 60 days now for Bitcoin to go up another 970,000. But we are in
Just fucking redacted.
apology, completely redacted. We're in a deflationary regime, basically. I think, or at the very like maybe disinflationary, deflation, but like we're not like going into hyperinflation any time soon. It's just so ridiculously the opposite of everything that's happening. Like they're concerned right now that maybe they've gone too hard, too fast, and things are going to contract like too quickly, right? So that to me is the bigger threat, that like we have some like exogenous event and it just causes like another deflationary shock, like a la COVID, and everything goes down and the dollar goes up in value, right? So that's still where I'm at, and I still think that's like the base case, like bad scenario, not hyperinflation. It doesn't make any sense to me.
But I still think one thing we didn't dig into enough is hyperinflation inevitable? Were we overly focused on this deflationary like period of time that is necessary, and then we were debating like the window of time that all like assets become deflationary? And so, okay, I get that. Like that's what we're entering. But is hyperinflation inevitable still?
No.
And is his theory directionally still correct?
No. Like you could say his theory is directionally correct in that probably after this coming deflationary bust, we will see QE, and we likely will see the further rise of populist politics and sort of fiscal stimulus. Is that going to be inflationary? Almost certainly. Is inflation going to stabilize at 2% over the next 5 years? No. I highly doubt it. Probably much higher than 2, maybe 3, maybe 4. 4% is not hyperinflation. It's just it's a far cry from
and even in some of the charts that he posted, he was looking at like since we depegged from gold or whatever. So he's looking at like 40-year period, and he's showing a chart of the value of a US dollar in terms of purchasing power, and he's showing how shitty it looks. Like that will continue to be shitty.
Can I make a comment on that too? Because this is something that just really grinds my gears. Is people post a chart of the dollar going down over time, and they're like, look at the dollar, worthless. The dollar is not supposed to be a store of value. It is a thing you sit on for liquidity in the short run to exchange. And the other thing about the dollar is the dollar has a built-in carry to it. If you have dollars, you can exchange those dollars for bonds. Bonds have an interest rate. Like if you look at the dollar over time in terms of like what happened if you invested in bonds, it still probably goes down in real terms. I will give you that. But it's not this like negative 99.7% thing. Or you could buy stocks, right? The idea that your choice is to basically sit there with dollars stuffed under your mattress for a century, and it's either that or Bitcoin is like this false choice. It's
so
silly.
let me just inject something here, because I think we can talk about hyperinflation. I think that's it's not going to happen.
Yeah.
Okay, so I think like I was listening to this guy Jeremy Siegel. Have you guys heard of Jeremy Siegel? He's like a professor at Wharton. He's a notorious stock bull, right? He wrote a book called Stocks for the Long Run. That was like a New York Times bestseller like 30 years ago. This guy's old, but he's like notoriously bullish. And today on CNBC, he came out and he's like, I don't see any reason to be holding stocks in 2023. And I've been following this. I even read that book like ages ago. Like this guy, when he goes bearish, I'm like, ooh, this is going to suck.
Damn.
Like, I think that like, for me, it's not this hyperinflation conversation. It's like really just protecting yourself against price moves downward, because I don't want to be holding risk assets when we go into this next phase, which is like we've gone from what liquidity cycle to credit cycle. You just mentioned that like banks aren't lending. Like that was his point. His point is that banks, like on the regional side and even further, banks aren't lending, and they've like tightened their lending further than they have in the last 40 years. Like that constriction. So you mentioned that this is a tightening of sorts. That's exactly what he mentioned. He's like earnings lower, tightening on like, lending. This all looks really bad. Don't own risk assets.
Yeah, and on a related note to what you said, I think a lot of people's mindset is like, how much money can I make? How much money can I make? How much money can I make? A lot of asset managers think of it in terms of the downside. Like, how do I avoid losing money? How do I avoid losing money? How do I avoid losing money? Because if you lose half your portfolio you need 100% gain to get back to even, right? If you lose 75% of your portfolio, you need a 200% gain to get even. Is that right? No, you need a 300% gain to get even, right? And it gets worse and worse and worse. Like if you take like a 90% hit, you need a 10x to get back even. Good luck. Like and so a lot of what's happening right now is trying to not fumble the ball, probably trying to be patient, maybe even being patient through like a really painful time. Like if we do go into like a mini melt up and you're kind of sidelined and everybody's printing money in shit coins, it's going to feel super, super, super painful and you're going to feel really dumb. But these crashes, these like actual, things that initiate the real bear, they're born out of complacency, right? Like it was very hard for us to crash last fall when like everybody was like, oh my God, the world is ending. Everybody was hedged, right? We're starting to get into an environment now where like we're having this discussion right now. We're like, Fed's going to pause. That's if there's no recession until next year, that could be a window for risk assets to go up. Look at the charts. The charts do look bullish. S&P looks like it wants 42, looks like it wants 43, right? And then when everybody starts doing that, they start chasing the gains, they stop hedging, the downside risk. That's finally when you have the ingredients to actually make that move. But it's really hard to make that move when everybody's sitting here talking about how everything's going to zero. It's
true.
It's just
like
hard.
Myself, I'm looking at myself now. Like I remember I said months ago, like when S&P hits 4150, I will get short again. And now we're there. And now I don't want to be I don't want to step in front of this train.
Join me, brother.
No, it's scary, dude. Like
It
I
is
think
scary.
that's the point. It's like, once this thing starts moving, it's like it's just hard to want to be on the other side.
Yeah. Yeah. It's just the thing you have to kind of prepare yourself for in the future. Like it does, things do look pretty good right now in the short term, in the medium term. You just have to keep that thought in the back of your head. Like, okay, maybe I'll party a little bit, but let me keep a lot of cash on hand and let me, tap myself on the side of the head when I start saying things like, this is a new paradigm, or like the bull market's already begun. That was the bottom, like that's maybe a sign to check yourself and take a breather, because we may have like another year or 2 or 3 of this. Who knows?
Likely. Well, let's talk about the market in terms of from the perspective of the individual who wants to be or is an entrepreneur or wants to become, an entrepreneur. Or even really just someone who has an executive position or is in the world of trying to survive right now within their company in this market. And there's
How's it looking like from your angle, my friend?
Yeah, and I think that's a good way to sort of illustrate the entire discussion. So everything up until, honestly, obviously we know the market was, especially the sort of like venture capital market.
Well, hold on. Just give me a refresh on where you're at and what you're trying to do. Who are you in this market? And then
Personally?
yeah, and then give me your perspective just after.
Yeah, so I founded a company called Steno AI.
Uh-huh.
And it originally began as this idea to utilize AI to create a huge library of podcast transcripts. And the more you learn about AI, the more quickly you realize you have to move. And the more quickly you realize how important it is to develop some sort of proprietary data set. And the most important part of the game, in particular with B2B SaaS generative AI companies, is developing a proprietary data set. So as I went down this route, I was like, all right, this is a company that's particularly for me, the place I'm at in my life and what the business is and what it requires to succeed needs outside capital. I have a history of bootstrapping companies and doing well with that. And they're great because we've talked about it on the pod before. The money you eat to kill, and you get to eat that. It's great. It's an LLC. The money is a pass-through entity. It flows directly down to your personal bottom line. And I'm an EO in Entrepreneurs Organization, and this is a really great group where you're surrounded by 7-figure business owners, and all of them, almost 95% of them, run some sort of entity where whatever they build and whatever they make, that money's going directly into their pocket. So being a startup founder of a tech company that's a C Corp, where you're really there to play a longer game, where you're raising money, and there's many different ways to raise money, which we can talk about, is a whole different paradigm. So I've pivoted to going from like this sort of consumer model where there's this value for someone who just simply wants to be able to read along and reference the material as they listen with podcasts, to like, wait a second. First of all, I started doing sort of like these introductory get to know you VC calls. And my game is to play the hot girl. Like, I try to never act like I'm raising money. And what I found very quickly is that it works very well.
Is this a standard in fundraising? Like, you have
No.
a hot girl archetype? Like,
No, these are all things that I've like, this is Alfalfa. It's
you've like developed this
Yeah.
through
Like,
your
most
own
people
observation.
will put a pitch deck together, send it to VCs and ask for a meeting. And then during that meeting, they're pitching and they're telling the VC why they're worthy of their time and consideration of investment. And that's a terrible model. That's how you lose 99% of the time. Like, you're basically betting on like someone just, I don't know, has a day where they're just like, yeah, man, today's the day I'm going to fund you and make your dreams come true. That's stupid. Like, that's not the way you want to go about this problem. The way you want to go about this is you want to have leverage, you want to have control, you want to control the narrative. And that's with everything, actually, by the way. Like, in any area of business, you need to control the narrative. If you're not controlling the narrative in the sales cycle, then you're absolutely fucked. Then you're at the whims of someone who's more talented, more smart than you at their area of expertise, which is investing in companies. But you don't want them thinking about investing in your company. You want them thinking about like, I have the domain expertise. I'm doing this with or without you. This is happening. And so the way you come into the conversation is just like a hot girl. It's like, I have many suitors. I have many people that would love to court me and date me and take me out and do all kinds of things to me. But I don't need you, because I'm actually talking to a lot of other guys. And that works tremendously well. And we haven't dug into the market or where I'm at, but where I'm at is that obviously the world of fundraising has almost completely
It's tightened up.
frozen.
It's tightened up to a point of not it being non-existent.
Yeah, if you're not a generative AI company, you're probably not going to get a meeting right now. And even those companies are probably not going to get a meeting right now. So that's where I think the discussion is valuable. It's like, what do you do if you're working on something valuable and you want to get some traction, get momentum, and build something of value to the world? So first of all, I think that building relationships with, if you were to already go through all the filtering necessary to decide that you want to raise money, which, as I said in another episode, is like kind of like taking the red pill, then great. You've decided that that's the right path for your company and you go down that path. But you're not going to be able to raise in a 30-day window or a 60-day window the way you would like right now, unless you have a tremendous amount of traction. And even then, you can have right now in generative AI, you can have $1 million ARR, annual recurring revenue, and probably have a lot of difficulty raising right now.
Wow.
In particular, later stages. So pre-seed and seed is difficult, but Series A and on is even more difficult right now.
Even more difficult.
Even
Wow.
more difficult. And this is all based on something I can link to. NFX, the company, the fund that I mentioned previously, did a survey, and they put out, actually I can pull up some stats that you guys find interesting. They did a survey and they asked founders, like, where are you at in this market? What is your sentiment in this market, given everything? Are you raising? Are you having trouble raising? Are your investors helping you? Are they not helping you? And it was really illuminating. But I do want to say, like, raising is one way. Like, the best way, whether you're a C Corp or you've decided to raise or what all that shit aside, your you're building a business. The goal is profit. So the focus for us right now is, first of all, I think there's something to talk about in regards to like accelerators that's pretty interesting. But maybe even more importantly, it's just getting to a profitable business model as quickly as possible. And that can be challenging to do in this environment. So there's many ways to go about that, but putting a product out and validating it with some customers and then giving it out to the public and iterating as quickly as possible to develop product market fit is the most important thing in the world right now. Like that's the only thing that I think really, really matters is like use this time if you can fund yourself or you can fund your company and not be reliant on outside capital or find a way, be creative, work in a garage, whatever it is, just focusing on product market fit is the most important thing in the world.
How do you bootstrap like software companies, like something that you're doing? Like, I feel like it's easy to do in like physical products, and I kind of know how to do it with physical products. For example, you can go the Kickstarter route. You can sort of demonstrate the product and sell it and get all the money before you even make it and just sort of cover your manufacturing up front. Is there like an equivalent to that in SaaS? Like, do you consider yourself a SaaS? Is that?
Yeah, I would. It's a good question. It's more difficult for sure because you can't go do a Kickstarter, which is like a crowdfunding campaign where you're pre-selling your product. Mm-hmm. But you can always pre-sell. You just can't pre-sell on crowdfunding. So when you're B2B SaaS or B2C SaaS or B2B2C, whatever, if you're SaaS software of any kind, or even services, like is a really good example, you can pre-sell. So what we did is we created a demo of the product. And you can take that demo or that prototype. By the way, a lot of people overthink the prototype phase. They think it has to be really perfect and dialed in like a fully functional product. No, you could literally sketch something out in any of these tools that are available today. Just show me what it does and like illustrate the promise of what it can do and make it simple and clear and easy to understand. And if you can make it a clickable, workable prototype, well, then great, even better, but not necessary. And if you do that and you know who your customer is, you can go to that customer and you can pre-sell. You can go to that customer and you can say, pay me a 50% deposit for the year at 50% off, and I'll go build this. And you'll be the first customer. And if I don't build this, or for any reason this falls through, you get your money back. And go get 10 of those, and then use that money to build the software. I mean, this is the MVP model in a nutshell. And I think the MVP model applies best to software, actually. I think it applies really well.
So people are willing to like prepay for software that's not
if it's something they need.
And they can use.
And they can use and provides value to their organization. And if they don't, then you're building the wrong thing. Either you don't know your customer or you're building the wrong thing. So if you're building the right thing and you know your customer, why would that person not prepay you to go build that thing? Like it's almost like it's crazy to think about. But it's like I can take a manual workflow that you do, and you're not a business in that sense, but let's just look at you, Stephen the trader, on an individual level. If I can take a manual workflow that Stephen the trader does on an individual level, and I say, Stephen, I can automate this workflow for you and save you 5 hours a month or make you an additional X number of dollars a month, can you give me half of that to go build this?
Right. And particularly if we don't have to build it ourselves and you can just go do it and like solve our problem, that'd be fucking huge.
I can see why it works. And there's definitely use cases where I've been so desperate that I'd be willing to do that. I guess if I were to try and sort of steelman the other side of it, like I feel like with products, there's scarcity because you're like, well, this guy can only manufacture so much of these. Yeah, I want to get the first round because if I don't get it, maybe it's not available for another 12 months, right? But how do you do that with software?
Price.
You just like a discount or something. Okay, that makes sense.
Discount and like, I'm going to charge $5,000 for this in the future. I'm giving you 50% off at $1,000.
Okay.
So my question, I have a what I'm very interested in asking you particularly, and I don't know how well this like segues in, but like as we, the three of us, sit here and talk together about your venture and similar ventures that aren't yours, but like my question is, knowing you and knowing how your sort of nature is to be this like storyteller, this sort of like poet with your words, and like this builder of epic sagas, right?
Mm-hmm.
This is like how I view you. Okay.
Oh, thanks, man.
And as you're like building out, like imagine you're selling a potential customer, right, on this like prototype.
Mm-hmm.
You're gonna build out this epic saga versus the antithesis of that would be like, here's 3 bullet points on why my shit is gonna help you. Period. Mm-hmm. You know, like I wonder like which model of sales works here with when you're talking about like a product.
Yeah.
Right? Like,
yeah.
Because I am always wanting to like take pieces of all of us, like all of our friend group, but it's like, oh man, you're so good at this. And like one of yours is just like being able to like build this whole story and everything. But like, does that person or investor or potential customer even give you the opportunity where they'd be like, no, just send me an email with like, you know, just hit me with the value prop and get it in my face?
Yeah. What a what a great question. What I've learned is that investors at this stage absolutely are validating like a few important things, right? Like, is there a market for this? Okay, hopefully. Is there a problem here? Maybe that's a more important question. Is there actually like a problem here with what you're building? And then is there a market? And then who's building it? But the who's building it is by far the most important thing. And so the who's building it part, like it's funny, if you look at the DoorDash Y Combinator video, application video, it's amazing. So there's 5 of them, if I'm not mistaken, 4 or 5 of the founders. And they're all these, they're hilarious. They're all these like off the charts smart Asian guys that went to Stanford. And they're sitting in a room.
So like Y Combinator, they ask you to submit videos to them.
Part of your application, it's just a 1-minute video.
Okay.
That goes with the application.
And for DoorDash, particularly.
And DoorDash was a Y. Many of the unicorns and decacorns, what makes Y Combinator famous is that they've created more unicorns than anybody, right? DoorDash is one of those. And I think 3 of the 5 were like either like went to Stanford and then became like programmers at like Facebook and all kinds of like really smart guys. And what they did really, 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 really well in their video is, first of all, they understand the fundamentals really well. Like what creates a great company. They looked at the Y Combinator materials and they were like, okay, we just reverse engineer that. What creates a great company? A great one-liner, a great problem to solve, a great team, an understanding of the market, an ability to be like flexible and, you know, all these things.
I mean, are they just mirroring that in their interview?
Totally. Like they're just like, you can watch them and they're just going through a script and they're telling you why they're a great company, how they have traction. It's awesome.
Sounds
it's amazing.
Like there's a lot of pickup techniques involved in startup investing and fundraising.
Dude, there actually is.
First,
so we're doing.
First,
dude,
you
there actually
neg,
is.
demonstrate value.
Yeah, do you use the full-on D.E.N.N.I.S system? Are you familiar with the D.E.N.N.I.S system?
I don't know what that is.
Oh, that's from It's Always Sunny.
Neglect entirely.
Yeah. D, demonstrate value. What's E?
Oh man, I forget.
What'd you say?
Engage physically. So what you're doing with the meeting, you sort of a little bit, maybe you give them a little touch.
Yeah.
N is
Neglect.
What's the walk away?
Neglect emotionally and nurture dependence.
Wait, what is the word you just said?
Dennis.
The D.E.N.N.I.S System.
Dennis is the
One
character
of the
in
characters.
Always Sunny.
And the
Okay.
S is separate entirely.
Separate entirely. Like,
Which maybe you don't want to do. Maybe
Okay.
that part
so
of the
he
system
used that on chicks, and that episode is fucking hilarious.
I gotta watch that.
But there are things here, right? Like
Yeah.
even VCs are human they're some of them
Dennis
are
them.
very human
You gotta
beings. who are
Dennis them.
well,
susceptible
with VCs
to-
in particular, the funny thing about them is that, and this is exactly like how guys are, is that the moment one of these girls, aka businesses, gets picked up, everyone wants that girl. So,
Oh, yeah. Once Sequoia is on board, it's like,
oh my god,
everybody's just
they're just wet
Yeah,
immediately.
yeah.
But to get to the root of your question, the story is incredibly important, and it's so important that if somebody says, "Hey, man, I'm really busy. Can you just give me the 3 points?" The answer is no. I mean, no, it's not no. It's just like, I can give you 3 points, but I'm not going to send you, like, their question is, can you send me your deck? Can you send me your deck? Why is this person asking to send the deck? Because they don't want to meet with you. Why don't they want to meet with you? Because they're busy, or they have a story, or they, they're just in a world of just like, right now is not the right time for their firm or whatever it is.
Wait, so
But
you
your
don't-
goal is to get in
so
front
you
of them.
Don't send the deck.
No.
So what?
No.
What do you do?
I
in lieu
used
of
to
sending
send the deck. I used
Yes.
to send the deck.
Now we Dennis them.
I used to send the deck, and I would say, like, and then then I'd have to send the follow-up email. Did you review my deck? What do you think of my deck? What do you think of me?
No, you engage
No,
physically.
fuck
At
you,
this
dude.
stage, you engage physically.
I wish I knew this acronym better. But no, you woo him in.
Yeah, the engage physically is to get the meeting.
Get the meeting.
yes.
Otherwise, you're just like
If you
throwing
don't have the
some-
meeting, by the way, then you get the meeting, and you're not interested.
That's when you neglect.
Yes.
Neglect. That's clear, Dennis.
So you got the meeting. So you got the meeting, and he or she or whatever thinks, the investor thinks, like, now you're going to give me the deck, right? And it's like, well, kind of, but like, I'm going to tell you some things, and I'm going to tell you a story about where I'm at and why I don't need you. Like, like we could work
Yeah,
together.
maybe we could work
Maybe there's something
Could
here,
be a
but
fit.
like,
Yeah.
All right,
But,
so
like,
this
I don't
is
know.
spot on so far. So the next N is we're nurturing dependence. Like, how do we?
Yeah.
That's because I feel like that's where you really you
First of all,
you
we're
sink
talking-
the.
We're
So if
talking
I
about a comedy
understand
show.
nurturing-
Is this actually?
if I understand nurturing dependence here, then it would be like, what I'm doing and what I'm building is so goddamn good and is moving so fast that you would experience a level of FOMO if you were not a part of it.
Yeah, they
Like,
need you.
So
They
what you
need to
start
be a part
doing
of
is
it.
you send them updates and you say, so-and-so's involved. This is happening. This is moving without you. This is happening without you. These metrics just happened. What they provide is not really necessary.
Okay, then you inspire hope.
Inspire hope.
How do we inspire hope here?
Inspire hope definitely feels like it's in there.
Yeah.
What is it in the,
maybe we're really oversubscribed.
Inspire hope is like the
We're really
I can-
oversubscribed
I
in
can
this
change-
round,
I
but
can
like-
change him. This
Yeah.
is gonna work.
Yeah.
super oversubscribed, but like I think we might fit you in. Like,
Yeah, that's exactly what it is, actually. That's the move.
That's funny. By the
that's
way, I
move.
do not endorse the D.E.N.N.I.S System for use with women. That's we're just this
No,
is
no,
just comedy.
Startups only.
Yeah, only VCs. It's
Yeah.
totally cool to use it on
well,
Yeah.
VCs.
on the Dennis system, you separate entirely at the end. Like, I think you're trying to actually raise money.
Yeah, that part would be a little weird. That guy just totally just left. Why-
He writes you a check, you just rip it in front of him.
You just leave.
Never needed you anyway.
Yeah. Sucker.
Oh man, no, it's a wild world though. But yeah, it dawned on me recently that it is a full pickup.
Yeah.
It's a full pickup, and there are so many, unfortunately, founders out there being the desperate guy. And I hope this little segment makes you realize, or your friend realize, or the person you should send this to, realize that that is fundamentally the opposite of how you should be acting.
Do you think that there is like a Venn diagram here of skills between like selling your startup and picking up a chick where you like
There definitely is.
that guy that's good at one would also be good at the other?
Well, I mean, like for a very specific part of this operation, yes. But the majority of this operation of running a company is very difficult.
You need to run a
and
business
outside of that
and execute.
Like we're focused on fundraising, right?
Yeah, I'm talking
And fundraising is really hard and really important, but really annoying. Because what does a founder really want to do?
Well, because Sam Bankman-Fried raised a ton of money, and I just can't imagine.
Well, he's an incredible fundraiser.
I
He
can't
inspired
imagine that
a
guy.
lot
He
of hope.
is extremely well connected.
But he couldn't pick up a chick in his life.
No, but he knows how to do those moves in this little nerdy world.
He did.
He's
he
doing
did
the same
He did the
moves.
full Dennis, by the way.
He did the full.
He did
Dennis.
the full Dennis. He
Yeah.
inspired all the hope, and
Separated
then he separated everyone entirely from their money.
Yeah.
You don't go full Dennis. You just go Denny.
Am I downplaying his ability to pick up chicks because he had this like sex ring in the Bahamas?
Well, that's the thing, right? It's like you don't have to be good at the chick part to do this fundraising part. There's a Venn diagram. They're not mutually exclusive,
There's
but
overlap.
there's two very different people at play here. So anyway, I think like logic and rationality and ability to know your numbers, like not just ability, but like you really know your numbers. Ideally, you're a technical founder, or you are technical enough that you can really drive the business forward, or you have a technical co-founder. These are important things. And then combined with like you're just extremely strategic. You know what you're building, why you're building it, and you've consumed enough of like the best practices of incredible unicorn companies that you can reverse engineer what is necessary to move to product market fit as quickly as possible. Because that's the name of the game. You move to product market fit as quick. And if someone doesn't know what product market fit is, there's a plethora of information out there about it that I should not be the guy to explain that. But in a nutshell, what it is people are breaking your door down to acquire your product. That's when you know you've achieved product market fit with no marketing. So like this is the opposite of many of the things that I've done in the past and the types of companies that I've been involved in is like everyone's overly focused on the marketing. I was having this conversation yesterday in the office. I was like, a lot of the people in this space and the other companies are like incredible marketers. They know how to take an ice cold prospect and convert that person into a customer. But they're not focused necessarily on like creating an incredible user experience and having a very high. So how do you know you've achieved product market fit beyond like the anecdotal people are knocking your door down? NPS score, net promoter score. When you guys use a product or service and they ask you, would you recommend this to a person? 1 to 10?
These guys all sold a lot of junk, but they've not created a bunch of great products themselves.
Sure, but like they're also trying to create great. Like there are people in here trying to create great products, but marketing comes as the primary engine, right?
Yes.
And in this world, it's like product is the primary engine.
Yeah.
And the question is, would you recommend this product to a friend? And if the answer is less than a 6, it's like you got to get to work. So there's a lot of that happening in the startup ecosystem where, especially in generative AI, there's a lot of people putting wrappers around Whisper or ChatGPT, and they're like, I've got the next tax, I'll be your outsourced bookkeeper, ChatGPT, generative AI model, blah, 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 blah. Give me $10 million. And it's like, what the fuck are you talking about? Like, what do you have here? What are you really doing? And how have you achieved product market fit? So that's what people in this market need to get busy on. That's what we're focused on. What I didn't mention is the accelerator thing. And I think it's important to mention before we kind of bring this home. So in this market, as we talked about, fundraising is hard, right? But I think if you're early stage, there are a lot of great accelerators out there. Y Combinator is a 1% admission rate. It's very hard to get into. But there's also Techstars, which is also just a few percent, and 500 Startups, which is also just a few percent. But beyond that, there's other accelerators. And accelerators are great because they give you some money, but they give you guidance and time to build. And more than anything, you're surrounded by people having this conversation on a daily basis. You would get it 24/7. And if you moved to wherever they were and you were part of some cohort and you got to live and breathe this shit for the next 90 days, how sick would that be while you build a startup?
And it's a big feather in your cap to be accepted into one of these, you know, in the eyes of prospective, you know, funders.
Yeah, it's a bit of a mafia.
Yeah.
Like if you're accepted into 500 Startups or Y Combinator, it's like, oh. And the mafia gets you in front of those investors. So the whole model flips from pitching to they're coming to you.
Yeah.
But I think that in particular in this day and age, in this market, the accelerator path is way more interesting to a lot more people. There is also the crowdfunding thing. So, Steven, you know, you were talking about crowdfunding for products.
Mm-hmm.
There is crowdfunding to equity raise, you know, on like WeFunder or Republic to raise money for your company from retail investors.
Slightly different model, right? Because you're not selling anything, right? You're
Right.
basically selling equity directly instead of selling the product.
Yeah.
Yeah, that's a good point. That's WeFunder. What's the other one?
Republic.
I never heard of Republic.
I think Naval was involved with that one. It's like it's an AngelList company, or it was acquired by AngelList. There's a couple other big ones that are not coming to mind, but those are the two biggest. And yeah, you put together a campaign on there and you raise money and get to work. But I think the accelerator thing is good. Or what a lot of, you know, the all-in guys talk about this every once in a while. They're like, they've been kind of alluding to this over the last couple of years, even though they're VCs. And they've been saying like, we've kind of entered an angel investor market, like where you could fill around with just angel investors. And you don't need funds. You don't need VCs anymore because there's so many angels out there that will cut 50 or 100K checks. Why wouldn't you raise $1.5 million with just angels who also come with a network and insight and expertise, and you could be well on your way. But again, what's necessary is like, do you have an investable company? And that is the biggest thing of what caused me to pivot is like, what is an investable company, and reverse engineering that. So I'm really proud of where we're at, where Steno AI is at specifically. And I should take a moment to shout out Ian actually, because I don't think I brought him up on the pod yet. But where Steno AI is at over the last month is I'm just really happy with the progress because we learned so fast and we moved so quickly. And what happened is we went to the meetup, the Alfalfa meetup in East Denver, our event. And this guy walks up to me and he starts talking to me about the nature of reality and physics and the universe. And I'm like 4 beers deep with him. And he happens to tell me that he's also a data scientist and a programmer. And we get to talking, and he had just been laid off. And he was like doing these hackathons, and he just won a hackathon in Web3. A super talented guy. And we start talking, and we hang out the next day. We go to the bar the next day. Anyway, long story short, he's like, let's talk about Steno, you know? And he's been helping with Steno over the last, what's it been, like a month? He's been helping with Steno, and it's been amazing. Like, we've built this demo of this whole new dashboard and applying to these accelerators and just moving so much more quickly thanks to Ian.
He's a great dude, man.
And he's a great dude.
What a beautiful demonstration of the power of our community, by the way. You know,
No.
But I think it extends beyond just
so
him.
cool.
It's like there's so many rad people that are in our Discord and everything. Like this is just one example of that. And
It's just one. There were actually like 3 different people who I was like, wow, like this person would be really cool to work with. And it was
Absolutely.
actually remarkable. Like how many talented people, how many smart, talented people came to the meetup. So yeah, I can only imagine what the next year's one would be like. Anyway, that's the state of the markets. That's the state of startups. I'm sure there's more there, but we'll leave it for now.
Yeah, that's a good convo. I
Right,
enjoyed.
amigos.
Yeah.
enjoyed the biz insights.
Yeah, for
Yeah.
sure. I'd be curious for those prospective founders out there. Let us know you're out there. Comment on the YouTube. Drop a comment in our.
come into the Discord. Maybe
Discord.
you'll find some help in there too.
Yep, there are actually people that have been teaming up in the Discord to build stuff. So we've got a Tech Talk channel and tons of stuff going on. So
Sweet.
anything else?
No, I'm good. My heart is full.
Your heart is full. I
Yeah.
love that. All right, guys. Until next time. Appreciate it.
All right,
Hop in the
thanks,
Discord.
everybody.
See you.
guys. Peace.